Travel names under pressure, some cruise lines and hotels, although some of the Apple ecosystem and tech doing well, the NASDAQ's green. Let's get to Bob Pisani. Hey, Bob.
Good morning, guys. Happy Tuesday, everybody. Sort of a flattish open here. The main question is, does this story about the UK and the vaccines over there, about the new strain, really change the narrative a lot? And I think the answer for the moment appears to be no, although that could change. You do see some weakness in the reopening themes, though. The banks had some good news on Friday, and they've been holding up. But energy stocks have been weaker recently. Industrials has kind of lost a lot of their energy. The REITs, the real estate firms, have lost a lot of their energy. Tech's been holding up very well, but there's definitely some COVID winter concerns that are floating around out there. Meantime, we keep seeing historic highs in some of these big exchange-traded funds that are around thematic ideas, anything around clean energy. That IPO ETF, that second one there, another historic high that's just been on fire, $700 million in assets under management now. Great year for IPOs. Online retail has been strong. People love buying online retail using these ETFs, and solar stocks have been really strong. This is not something that's happening today. Every day for months on end. And yes, you can say, of course, a new Biden administration will have interest in clean energy, but people have been going in buying these thematic ETFs. Take a look at how these thematic tech ETFs have been doing just in the month of December. Cybersecurity, lithium and battery, cloud computing, clean energy. You can watch the flows of these, which is why I watch the ETFs, because people come in and buy them, and they have to create new ETF shares by buying the underlying stocks in these. And so you can actually watch creations. You can watch investor enthusiasm wax and wane in these ETFs, which is why I follow flows. And the flows have been tremendous since May, starting back in May. So this is really a theme, and people love buying these kinds of ETFs and tech thematic ETFs in this matter. Meantime, I think the important thing is whether the bull narrative has changed around this UK news about a new strain in the vaccine. The feeling seems to be the new virus version won't be any more resistant to the vaccines. If that is the case, then this bull narrative is intact. And the bull narrative is the COVID winter is coming. It's going to be 3, 4, 5 months, but the Holy Trinity is still in place. You've got a smooth rollout of vaccines, you've got a massive stimulus, and you've got second quarter reopening and improved earnings overall. That still seems to be firmly in place. Now, look at yesterday on the S&P. What you had yesterday at the open was a freak out by what we call weak hands, and a lot of people concerned that this may be a game changer in terms of the narrative and trying to protect earnings for the year. But as you can see, when a lot of people thought about it, actually the narrative seemed to be relatively intact, and there was buying in the middle of the day. That was quite a reversal, but that's a weak hands at the open story, concerned that there's a bigger narrative going on here. Also, I would bear in mind that the COVID winter story is very, very real, and you're going to see it in commentary from various companies that are out there. Look at CarMax, for example. This is a very good example. CarMax had excellent numbers. Their earnings, they beat on the earnings expectations by almost 25%. So just looking at the headline number, the earnings were outstanding. But look a little bit below the hood here. Comparable used auto sales fell almost 1%. It looked like demand softened in the latter part of the quarter. Sales trended down in the latter part of the quarter. That's the COVID winter story there. And I think you're going to hear more of this. And CarMax has had a decent year. It's performed about in line with the S&P. It's up about 15%. But you see it, down on this, simply on the expectations that they're going to see softer sales in the month and perhaps the next 1 or 2 quarters ahead. Does it mean that it's a terrible situation in 2021? No, but it does remind everyone about what we're going to have to be going through in the next 3, 4, and 5 months.
Shepard Smith here. Thanks for watching CNBC on YouTube.